FTX has collapsed, WTF just happened, and what could it mean for the cryptocurrency markets as we head into the end of the year? Well, Arthur Hayes, the CEO of BitMEX, is calling this our Lehman Brothers moment, and the collapse of FTX is a damn big deal. You see, the exchange did about $40 billion a month in spot market volume and over $300 billion a month in derivatives trading volume. It was a massive player. It has been ranking among the top 5 cryptocurrency exchanges in the market for the last 18 months, and now it is dead. It's over. So what the hell happened? Well, earlier this week, the cracks started to appear when Binance CEO CZ tweeted that they would be selling their position in FTT, which is the FTX exchange token, due to not wanting to support other players in the industry who lobby behind others' backs. Now, that was $500 million of FTT tokens. Now, this started fears of an insolvency crisis at FTX. We saw traders rushing for the exits, withdrawing billions in days from the FTX exchange, although unfortunately not everybody got their money out. The FTT token started to get absolutely hammered, and while in theory that should have been fine, the problem is that FTX wanted to be quote unquote capital efficient and used the FTT token as collateral for loans. The problem then became that FTX had massive loans that would get called if the price of their token dropped too much, which is exactly what happened. Debt is a real curse for cryptocurrency businesses because of the ultra volatile nature of this market. And the crazy thing is that just a day before the collapse of FTX, SBF, Sam Bankman-Fried, the CEO of FTX, was tweeting out that everything's fine in a statement that was sadly far too reminiscent of the statement from Lehman Brothers just days before their collapse. This was a week after someone leaked that Alameda, which is FTX's venture capital arm, had only $12 billion in assets, but $7 billion in liabilities. The problem with that is that the assets were largely made up of FTT tokens, meaning that these assets could no longer cover liabilities if the price dropped too far, which is exactly what happened. There was also a fear that FTX may have been lending out customer funds. That's just a rumor at this time, but if that proves to be true, holy cow, bad beyond belief. Anyway, while it initially looked like Binance would be buying FTX and probably what would have been one of the most dramatic and insane deals in this market's history, Binance, it now appears, has backed out of that deal, citing reports of FTX potentially mishandling customer funds and, of course, potential US regulatory investigations coming for the FTX exchange. Within just a few days, FTX went from being a top dog to being taken out back and shot. Now, before telling you about just what the heck the fallout of the FTX collapse could still be, because there could still be a lot of crazy to happen, and what the lessons here are, I just want to let you know about my weekly cryptocurrency investor newsletter. It's called Wealth Mastery. It's absolutely jam-packed with alpha on altcoins and airdrops and NFTs and DeFi tutorials, market analysis. I know the markets are crazy right now, but there's still money to be made out there. Join our 50,000 weekly readers by signing up for free using the link down below in the description. So what happens now? Well, this is definitely a crazy situation that FTX went from basically buying naming rights of stadiums, bailing out bankrupt lenders like Voyager and BlockFi, to themselves now going under. And now FTX CEO Sam Bankman-Fried has apparently even announced bankruptcy also. Only in crypto, man, can you go from being on top to the absolute bottom in a week. The first casualty, of course, in this whole thing will be the deeply intertwined venture arm of FTX called Alameda. They're done for, without a doubt, as is their support for dozens of portfolio companies. Alameda's money was everywhere in crypto, and their crypto holdings of things like Solana, some of which are already being sold off to try and stop the chaos here, could have a big impact on the market. Then, of course, there are all the VC partners. FTX was a widely invested in exchange. Companies like Sequoia Capital, Paradigm Capital, they had big stakes in FTX equity, which are now worth zero. Companies also had stakes in the FTT token, which is basically worth zero soon, probably. Their losses will be in the billions. This is in a year that has already been very hard for cryptocurrency funds, and this could be the nail in the coffin for some of them. And while you may not shed any tears for venture capital funds, the potential of them needing to fire sale any assets on their books just to stay afloat is what you should be concerned about, because that could hit markets hard. Now we need to talk about the Solana ecosystem. FTX, Alameda, SBF, they were the biggest backers of Solana. So what the heck happens now to the Solana ecosystem without this money and this backing coming in? How many Solana ecosystem coins could end up being heavily sold off as FTX liquidates its positions. Very real concerns for Solana ecosystem users. Now let's talk about the users. It remains to be seen what is going to happen with user funds on the exchange. I don't have a good answer for you. I wish I did, but it looks like we're probably going to bankruptcy proceedings. Your funds could be tied up there for a long time if you didn't get them out. But once again, we are seeing a big company potentially taking users under with them. And yes, at the time of recording, withdrawals from FTX have been stopped, trapping billions in user funds. This is the 2022 version of Mt. Gox. It's hard to overstate just how incredibly bad this is for crypto. And of course, we need to talk about the wider cryptocurrency market too. Let's not pretend that a top 5 cryptocurrency exchange going down in the way that FTX has just gone down is going to go completely unnoticed by regulators. SBF, before the fall from grace, was pushing for basically massive regulations, lobbying regulators. He became the face of crypto regulation in DC. But now this could in fact be an excuse to bring the hammer down on the industry. And as Chris Berniski says, the coming months could lead us into something of a valley of despair, if you will. The whole industry could face serious doubt about its future because of what's just happened with FTX. It remains to be seen, of course, how bad shit is going to get. But a liquidity cascade downwards is a real risk here as we see all of the above continue to unwind, as we see the contagion continue to spread in the coming days. We could have a lot to deal with here, so be careful. The rabbit hole of shit may go very, very deep here. So what are the key lessons here? First, the crypto market is just savage as duck, man. Like there's no mercy. It's all player versus player. The lives of plankton depend largely on what the whales do. We don't have control over this kind of stuff. We just suffer the results of it. Also, more importantly, do not keep all of your crypto on a centralized damn exchange, guys. Come on. Come on, how many times we got to say this? And look, my heart goes out to anyone whose funds are stuck on FTX, but god damn it, they're not banks. And look, almost no one saw this coming or could believe it when it happened, but it has happened. Okay, that's it. Subscribe now. I'll see you next time.